Hey there, welcome to my channel. Today, we will talk about monthly dividend ETFs, a fantastic way to gradually create passive income to amass riches. Now, you might be wondering what a monthly dividend ETF is. Well, it's an investment that pools your capital from other investors to purchase a diversified stock portfolio that pays high dividends. It means you earn a regular monthly income while benefiting from the growth potential of the stock exchange. S&P 500 High Dividend Low Volatility ETF, SPHD. Let me tell you about the S&P 500 High Dividend Low Volatility ETF, SPHD, an excellent option for investors looking to make money through dividends. My friend Noah is a retiree searching for a stable investment option that can provide a regular income stream to support his retirement. He is not interested in high-risk expenditures, but wants to invest in stocks that provide consistent returns. That's where SPHD comes in. This ETF invests in 50 low-volatility stocks from the S&P 500 and offers substantial dividend yields. It is an excellent chance for investors like Noah who want a stable investment with a reliable income stream. Over the past year, SPHD has performed exceptionally well, generating an average annual return of around 20%. The ETF strategy of investing in high-quality, low-volatility stocks with high dividends has allowed it to provide consistent returns for investors. Warren Buffett once said, "It's far better to buy a wonderful company at a fair price than a fair company at a wonderful price." This quote perfectly applies to SPHD because it invests in high-quality firms with a long-term horizon. SPHD pays monthly dividends, making it an ideal investment option for retirees like Noah, who rely on a regular income stream to support their lifestyle. In conclusion, the S&P 500 High Dividend Low Volatility ETF, SPHD, is an excellent option if you're looking for a stable investment option that provides regular income. By investing in high-quality, low-volatility stocks with high dividends, SPHD has consistently provided returns for investors, helping them achieve their financial goals. Invesco Preferred ETF, PGX. Let's discuss the Invesco Preferred ETF, PGX, an excellent investment option for investors seeking stable dividends. Preferential shares are a hybrid of bonds and common stocks, offering investors the stability of bonds and the possibility of greater returns of common stocks. They are a great investment opportunity for investors seeking stable dividends, and PGX provides exposure to a portfolio with diverse preferential shares. Over the past year, PGX's holdings have performed well, generating an average annual return of around 10%. The ETF's holdings include preferential shares from various sectors, such as financials, utilities, and energy, which provide diversification and reduce the risk associated with investing in a single industry. Even better, PGX pays monthly dividends, making it an ideal investment accessible to sponsors who want a regular income stream to support their financial goals. In conclusion, the Invesco Preferred ETF, PGX, is a great investment opportunity for investors seeking stable dividends. With exposure to diverse preferential shares, PGX provides investors with the stability of bonds and the possibility of greater returns on common stocks. By paying dividends monthly, PGX offers investors a reliable income stream, making it an ideal investment option for those searching for regular income. Global X Super Dividend US ETF, DIV. We've talked about two great monthly dividend ETFs that can help you build wealth over time, and now it's time to dive into another one. Let's talk about the Global X Super Dividend US ETF, DIV. DIV's investment strategy targets high dividend yield stocks across various sectors, allowing for a mixed portfolio. This approach helps investors minimize their risk while still allowing them to earn passive income. DIV's leading holdings include corporations like AT&T, Ford, and Verizon, known for their substantial div payments. Over the past year, DIV has performed well compared to other dividend ETFs, generating a return of around 20%. Given the current market conditions, it is impressive and a testament to the strength of the ETF's investment strategy. DIV has consistently outperformed the S&P 500 in terms of dividend yield. As Warren Buffett once said, diversification is protection against ignorance. It makes little sense if you know what you're doing. This quote perfectly applies to the expenditure strategy of DIV. By targeting high dividend yield stocks across various sectors, the ETF can supply investors with an array of investments, which minimizes their risk and maximizes their development prospects. In conclusion, the Global X Super Dividend US ETF is an excellent opportunity for investors to ensure a diverse portfolio with a high dividend yield ETF. Its investment plan works to generate consistent returns for investors, and its most significant holdings include well-established companies known for their substantial div payments. So if you're looking to earn passive income while minimizing your risk, DIV is worth considering. Global X Super Dividend ETF, SDIV. Unlike the previous ETFs we discussed, SDIV has a more global approach to funding. The ETF seeks to fund heightened dividend yield stocks worldwide, providing investors with exposure to international markets. This diversification can be attractive to those who want to spread their risk and increase their returns. So, how has the SDIV been performing over the past year? Well, it's been a roller coaster ride. In the first half of the year, the ETF experienced some volatility due to the COVID-19 pandemic and the resulting economic uncertainty. However, the ETF's performance improved as the year progressed, and the global economy started to recover. Overall, the SDIV has provided investors a solid return over the past year, outperforming other global dividend ETFs. It is partly due to the ETF's expenditure strategy, which focuses on stocks with a strong record of paying dividends. Diversification can reduce risk in an investment portfolio. Investing in a global dividend ETF like SDIV can spread its risk across different countries and industries, potentially increasing their chances of success. Overall, the Global X Super Dividend ETF, SDIV, is a decisive vote for investors examining for orientation to international markets and a high dividend yield. Its diversified approach and solid performance over the past year make it a strong contender for any acquisition portfolio. Invesco KBW High Dividend Yield Financial ETF, KBWD. To increase portfolio diversity and earn solid returns, check out the Invesco KBW High Dividend Yield Financial ETF, or KBWD for short. This ETF focuses on investing in high dividend yield stocks in the financial sector, including banks, insurance companies, and other financial institutions. By targeting these specific stocks, KBWD offers investors the possibility of higher yields than other financial ETFs that don't have the same focus on dividends. Over the past year, KBWD has performed well compared to other financial ETFs, partly thanks to its focus on high dividend yield stocks. Of course, past interpretation doesn't guarantee coming outcomes, but it's always good to see an ETF with a successful track record. One of the most exciting things about KBWD is how it fits into Warren Buffett's investment philosophy. He is famous for his belief in investing in high-quality businesses with a long-term perspective, and that's what KBWD is doing. By focusing on financial institutions that are likely to provide stable and growing dividends over time, KBWD is looking to build a portfolio of high-quality, long-term investments. Of course, financing in any ETF comes with risks, and KBWD is no exception. As with any financial ETF, there's always the potential for market volatility and outstanding commodities that could affect the implementation of the ETF. But by focusing on high dividend yield stocks in the financial sector, KBWD offers investors the possibility of solid returns and a way to spread out their holdings with exposure to the financial industry. If you're interested in KBWD, it's always a good idea to research and speak with a financial advisor to determine the right fit for your portfolio. But if you're looking for a way to invest in the financial sector and earn some solid returns, KBWD is worth considering. And that's a wrap on my top 5 monthly dividend ETFs. I've covered a variety of options that provide investors with exposure to high dividend yields from various sectors and regions. While each ETF has its unique strategy and holdings, they all share the goal of providing investors with stable income. Remember, investing always carries risks, and it's crucial to research and seek advice from a financial advisor before financing any ETF. But if you're looking for a way to earn passive income, these ETFs are great options. If you enjoyed this video, subscribe to our channel for more investment insights and tips. Remember to like, share, and comment below with your thoughts and experiences with dividend ETFs. And now, I invite you to watch the following video. Click on the end screen to continue your investment journey with us.